This move does not start at the bottom. It starts at the edge of structure. Go back to March 26th Asia session. The base candle forms exactly at the lower boundary of the March 26th US session box. That positioning is critical because price is no longer centered. It is no longer balanced. It is sitting at the edge. And when price forms at the edge of structure, it is not deciding direction. It is already leaning. From that position, price begins to move down. But the key here is not the movement itself. It is where the movement is going. Price does not drift. It does not pause randomly. It moves with precision into the lower boundary of the March 3rd US session box. This is not coincidence. This is structure-to-structure movement. Time reveals this clearly. The move is continuous. There is no prolonged hesitation. There is no return to mid-structure. Price moves directly from one session boundary to the next. That tells you this is not rotation. This is relocation. Volatility expands during this move, and the expansion is directional. It is not wide-range noise. It is clean extension. And importantly, the expansion ends at structure, not beyond it. That shows control. Position shifts completely. Before the move, price was interacting with mid-structure. After the move, price is fully located inside lower structure. That is a change in environment, not just price. Interaction begins only after arrival. Once price reaches the March 3rd US session low, it stops extending. It begins to react. This is where many traders misread the market. They expect continuation because of momentum, but structure has already been reached. So the behavior changes. The reaction tells you something important. This level holds memory. It is not just a price. It is a zone where the market has previously made decisions, and now it is doing the same again. Pressure begins to shift here. Downward pressure is still present, but the ability to continue lower weakens. You can see this in the slowing movement. You can see this in the lack of follow-through. So this is not the beginning of the move. This is the completion of the move. March 26th Asia session is not where price breaks. It is where price arrives. And if you understand that, you stop chasing the move and start understanding where the move is supposed to end. Now move to March 27th US session. This is where the market becomes difficult for most participants because nothing looks obvious. There is no strong trend. There is no large candle. But this is where the structure is rebuilt. The base candle forms between the mid and lower range of the March 3rd US session box. This is important because price is no longer traveling. It is holding, and not just holding randomly. It is holding at a structurally significant level. This area aligns with the weekly 0.33 level. That adds weight to this zone. Time behaves differently here. Before, price was moving quickly. Now price stays in the same region for an extended period. This is not inactivity. This is accumulation of structure. Volatility contracts in this phase. After expansion, the market compresses. This compression is necessary because without it, there is no base for the next move. Position stabilizes. Price is still inside lower structure, but it is no longer at the extreme low. It lifts slightly and begins to hold within range. Interaction increases significantly. Price tests the lower boundary. Then it moves to the upper boundary. Then it returns again. This repetition is not random. This is the market, probing both sides of structure. It is testing acceptance. Pressure becomes mixed. The memory of the drop remains, but upward attempts begin to form. This creates internal conflict. And that conflict is what builds direction. Most traders fail in this phase because they expect immediate continuation. But continuation does not come without preparation. This is the preparation phase. If price holds inside this structure and gradually shifts upward, then the next move will expand higher. If price fails to hold and breaks lower again, then the previous move continues. So this phase is not neutral. It is decisive. It determines whether the market resolves upward or downward. And if you can read this phase correctly, you are no longer reacting. You are anticipating. Now move to March 29th Asia session. This is where the result of everything before becomes visible, not as a sudden move, but as a structural transition. The base candle forms at the area where price previously broke down from the March 27th U.S. session. That alone already tells you something important. Price is not exploring new territory. It is returning to a prior decision point. More precisely, this location sits between the March 3rd U.S. session low and the March 24th U.S. session high. This is not just a midpoint. This is a transition zone, a place where structure changes state. Time shifts clearly here. Before this, price was moving downward, from structure to structure. Now, price stops moving lower and begins to move back upward into previous structure. That is a change in behavior. And behavior always comes before direction. Volatility expands again. But this expansion is different. The previous expansion was downward. This expansion is upward. And that difference matters, because volatility direction reveals intent. This is no longer continuation. This is transition. Position changes as a result. Price is no longer held in lower structure. It is no longer reacting only at the bottom. Now it is lifting into mid-structure. This creates a new environment. And in a new environment, different rules apply. Interaction becomes focused on a very specific level, the upper boundary of the March 3rd U.S. session box. This is now the key reference point. This level was previously support. Then it failed. Now price is returning to test it again. This is not just a test. This is a validation point. The market is asking a question. Can this level hold again? Or does it reject price back down? Pressure becomes directional again at this moment. Before this, pressure was mixed. Now it starts to resolve. If price holds above this level, then the market accepts a higher structural position. And that opens the path for continued upward expansion. But if price fails here, then this entire move becomes temporary. And price rotates back into the lower structure. This is why this moment matters. Because it is not just a reaction. It is a decision point. So when you look at this move, do not think of it as a bounce. Think of it as a sequence. March 26th was structural completion. March 27th was structural formation. March 29th is structural re-entry. And right now, price is deciding whether that re-entry becomes continuation or rejection. If you understand this sequence, you are no longer reacting to what price just did. You are reading what price is about to decide.